Bitcoin is trading at $114,000. We are seeing a little bit of red. And while pullbacks and corrections are completely normal in any uptrend, there are reasons to start to get more concerned why maybe even a potential top could be in already, because last week's weekly close on Bitcoin looks very, very ugly. So in this video, I want to present to you the charts, the facts, the possibilities, so that you have more information to help you make a better informed decision with your own portfolio and your own trades. Now let's start out first by once again reminding you that we are getting towards the very end of the cycle. The longest that any bull market has gone on for Bitcoin is 550 days after the halving. The previous halving was in April of 2024, and that would mean that 18 months post-halving, or 550 days, would be approximately by the middle of October, which gives us now right around 2 months, about 60 days to go until we hit that maximum cycle length. And assuming that this time is not going to be any different, that means that the closer that we get to the date of mid-October, the more likely it becomes that the cycle top is in. And there is no guarantee that this cycle is going to run exactly to that 550 days. It could also top before, and yes, of course, it could be different and maybe it tops later and we get the longest cycle ever this time, but that is far from being guaranteed. So let's start out by looking at the weekly candle. This is a weekly chart of Bitcoin with the 50 simple moving average in blue. And quite simply, what we have here is concerning in my opinion, because we have had here a kind of tweezer looking top that has happened before in the past. You can see it over and over here at these tops. And if you look at the data, it's just a little bit concerning here, because you can see what happens. And let's just zoom in a little bit more so you can see it more clearly, especially if you're watching this on a smaller screen. You can see here what happens with these tweezer tops is we make a high and then we get another wick above that high, and then we get a correction. In the same way, we've seen it here now too. We had a high, we got a wick above and a red close like this. It's not a bullish thing, guys. Most of the time when you see something like this, especially after it swept the high, it doesn't look great. We can go back to 2021. You can see over here it was the same thing. We had a high, we had a wick above it, and then we had a pullback. This was the first time back to the 50 simple moving average. Then we had a slightly higher high overall, here you can see, and again, even on this top, we had a wick, and we had a wick above it, and that was it. That was game over. Look at the similarity now between what is happening here and what happened in 2021. It's almost, it's creepily, is that a word? Creepily identical. It's like scary identical. You can see the same thing we had. It's just too crazy. Like you can see here, this high dropped to the 50 MA, same thing over here, dropped to the 50 MA, a move higher to just above the previous high, same thing, wick above it, bearish looking candle, and now we are starting to see declines. And what you also need to keep in mind here, this is purely technicals for now, is that we still have this weekly bearish RSI divergence. So not only do we have these little wicks and this little top and this little copy of what happened in the previous cycle, but we also have the bearish RSI divergence for these whole three thrusts over here. While it's making higher highs, the price on the RSI, or the RSI is not confirming the higher highs, it's making lower highs. This is bearish. On top of that, as I explained, we're getting towards the end of the cycle, and while the longest cycle ever has another 2 months to go, there's no guarantee. There's also been much shorter cycles. So at this point in time, and that alone is already reason also to potentially suggest that a top might be in. Now, August and September have a history of one of those 2 months, either August or September. Since 2013, every single year without exception, either August or September is red. Now, both of them could also be red, but at least one of them is red. And combining all these things together, we're also starting to see a lot of distribution, meaning a lot of whales, a lot of dormant wallets that have literally held onto Bitcoin for years and years have woken up moved coins to exchanges and are starting to sell. That is not something that you see when things are bullish, right? It's not what you see at the beginning of the cycle. These are people who have held onto Bitcoin for a long time, millions, tens of millions of dollars, and are now deciding it is time to sell. And I think the only reason the markets are still kind of being held up is because people like Michael Saylor and like Tom Lee, who are raising billions and billions of dollars and market buying the absolute top of the cycle, that's still kind of giving the buy pressure for all these people who are selling to not completely nuke the markets. But when the buying stops and the selling continues, the whole market can drop. And I'm afraid that this time, unlike the previous two times where the 50 MA held as support, I'm afraid if we retest it a third time, it's going to be the time that it breaks to the downside. And that is the point where we get the official kind of bear market confirmation, where if we lose the 50-week moving average and we get a weekly close below that, then it becomes very likely that we see another 50% drop from the loss of the moving average, which is currently at 94,000. So another 50% drop between 94,000 puts us at somewhere like 42,000 or so for a potential bear market low, which also lines up with other metrics like, for example, the coin value days destroyed, the CVDD, which has marked the floor previous bear cycles, which is somewhere between 30 and 40,000 at this point in time. I mean, things can change as we get closer to that, but this is a reason to be concerned, in my opinion. And even if we still do go a bit higher, we still have some potential hopium where we have this 2-month window, and October and November are traditionally, seasonally, the most bullish months for Bitcoin. So maybe this is a dip and one more push, but we are getting very, very close towards the end of the cycle, and there's no guarantees that we still do go for another 2 or 3 months. So again, this is just the information here. I'm just presenting it. I'm just the messenger. Okay, what you do with your own money is your choice. If you want to continue buying and you want to start leverage longing, that's ultimately your choice to make. But the risk reward in terms of where we are in the cycle, how far we are above the 50-week moving average, the divergences, the patterns, the data, the distribution, it makes it not a very good place to be longing and max longing. And I personally think, this is my belief, these companies, these treasury companies, especially the random ones that have nothing to do with crypto or finance, who are now raising money to buy Bitcoin as part of their treasury strategy to help them be relevant or make a profit because they're already like kind of failing at life or whatever the case is. You know, they're doing this, and they're going to get absolutely wrecked in the bear market. Like they're the dumb money of this cycle. They're buying the tops, while other people, the whales, the OGs, the smart money, who has held since the lows, are selling into them and they're buying the tops. It's pretty wild to see. So I do think 2026 is going to be a bear market. The 4-year cycle repeats, right? 2014, 2018, 2022, 2026. Bear market. It's lining up that way. And that means if there's going to be companies that are overextending, which is always the case. I mean, previous cycle, we had completely fraudulent companies like the lending platforms like Celsius and stuff, but we also had many funds that overextended, that leveraged long, that didn't expect the bear. I think we're seeing the same thing here. We're going to see it probably with some of these treasury companies that are raising money that think we're going to go up only, and they're not prepared for like a 50% drawdown in the market, and then they're going to become forced sellers, and if they borrowed that money or it's on margin, and they get liquidated, we might see a bigger acceleration, more forced selling of other people who can't afford the losses, and that gives us our nasty bear market, which should probably bottom out somewhere at the end of 2026 or early 2027 based on these 4-year cycles that so far are looking like they are once again perfectly repeating. So if you look here right now, I just zoomed in a little bit, it's a 3-day chart now, but basically this level that's important here is around 109,000. So there is still a little bit of room for the bulls potentially to step in if this is some sort of correction and they can push it up one more time. But I think if we get below 109,000, which isn't too far away at this point, if we get below 109,000, it's very possible we retest the 50-week moving average, which is 96,000 at this point in time. And like I said, I think the third test might actually not hold. And if we lose 96,000, the 50-week moving average, well, then maybe it's bear market and targeting, I don't know, 50,000, 40,000, under 40,000. So I want to present all this data to you. I think on the high time frame, this chart isn't looking great, and I think there's enough top signals to warrant some caution. Now, of course, what kind of strategy you employ is completely up to you. If you have Bitcoin and you're planning to hold it forever and not sell anything, then it doesn't matter, right? For that stash, and you're just simply going to dollar cost average as it drops, that's fine. Then you shouldn't care about the day-to-day or the week-to-week or even the month-to-month. It doesn't matter if that's your strategy. But if you are doing anything with trading and your aim was just to increase your risk capital by buying low and selling the top of the cycle and then waiting for it to drop and buy back again more coins at the bottom of next cycle, well, then you should be paying attention to the price action, and especially on the higher time frame when there are signs of caution. And then it is worth paying attention to the fact that this could possibly be distribution and very close to a top. No matter how much people are telling you that it's going to 180,000 or 250,000 by the end of the year, none of these people know for sure. And a lot of these people are not to be trusted with what they're saying, because a lot of them are also likely saying it out of their own interest to keep people invested in the market while they're selling, or to maintain a profile, to maintain investments in their fund, or whatever the case is. A lot of these people have their own agendas and reasons for saying the things that they say, and there's no guarantees that the market is going to 250K or 180K or anything like that. Nobody can tell you that. So be cautious, be careful, calculate your risks, and then let's see where things end up. Let me know in the comments down below. Do you think we've topped? Do you think this is a temporary correction? Do you think we go higher? Let me know down below. If you haven't seen it yet, if you need a place to trade crypto, spot, and futures, BLOFIN Exchange is where I personally trade. I have a really good deal with them. So currently we're running a campaign where you can get up to 200,000 USDT in cashback on trading volume. That's obviously dependent on trading a lot of volume, but that's incremental based on the volume you trade. There's a link in the description down below if you want to know more about that. Sign up with my link down below and you will be able to be eligible for those cashback campaigns.